Most sensible world investment portfolios will aim to have their largest allocation in US equities. At Money Unshackled, we aim to have somewhere around 25 to 40% of our portfolios in US shares, and there are very good reasons for this.
Having a position in US stocks is essential, but far too often we come across UK investors who foolishly, in our opinion, snub the largest investment market in the world. These UK investors have an irrational bias towards UK stocks.
I know this firsthand because I was once one of these investors. For years I was almost completely invested in UK stocks, meaning I missed out on a large part of the US bull run.
We can understand why UK investors have this home bias. Much of the reporting from the UK media is only ever about the FTSE 100, and historically, accessing international markets like the US was more difficult and expensive.
But with American companies dominating our lives and technological advances bringing down the cost of trading US shares, this has now all changed.
In this video, we're going to tell you why you should be investing in the US stock market. Let's check it out.
Welcome to MoneyUnshackled.com, the investment and finance channel and website that sets you and your finances free.
That was Andy and I'm Ben, and if you like what we say, hit the like button and click subscribe.
This video is sponsored by Stake, an exciting new investment app specialising in US stocks. With over 3,500 US stocks available, there's so much opportunity to be seized upon, including investments in giants like Tesla, Apple, Google, Netflix, Uber and so many more.
We think that every investor needs to be invested in the US due to the enormous influence that country has around the world, and a great way to get invested in the US is via a specialist platform like Stake.
Stake offers unlimited commission-free trading and trades are executed in real time. It is of course FCA regulated and comes with FSCS protection. Plus, Stake offers fractional investing, allowing you to buy any dollar amount of any share. Awesome!
And for a limited time, Stake are giving away a free US stock worth up to $100 when you sign up via our link. We'll put the link to the offers page in the description below, so be sure to check that out. Now, let's get into the video. How does the US compare to the world? The FTSE All-World Index, which covers developed and emerging markets and tracks 90 to 95% of the world's investable market capitalization, is dominated by US stocks. Despite it being a world index, American stocks account for 55% of it, while UK stocks are only 4.6% of the index. 4.6% may sound small, but it's actually the fourth largest position in the index, after Japan and China. So the UK market is no small fry, it's just that the US is an absolute behemoth.
These percentages should act as a guide to how much of our portfolio should be allocated to each region. Of course, some home bias is fine, which is why we still put more than 4.6% in UK shares. And maybe we'll cover the reasons for this in a future video. Let us know in the comment section if you're interested in this. You can of course overweight any particular region that you are bullish about, or underweight regions that you are less interested in. The key is to ensure that you are properly diversified.
Why invest in US stocks? Over the last decade, the leading US stock indices, such as the S&P 500, have given investors much higher returns compared to those in the UK. And we mean much higher. The UK stock market has been left in its dust as US shares have powered ahead.
For those investors who have limited their investments to the UK or even Europe will have missed out on handsome returns. We've all seen how the UK has been rocked by Brexit uncertainty in recent years. The US market is home to some of the biggest and best known companies in the world, and we want to make sure that we get some exposure to this. Here are the key reasons why you need US exposure.
Number 1. Global exposure. The US has literally thousands of listed companies, and the largest 500 make up the S&P 500. These 500 leading companies make up approximately 80% of the US market capitalization and have a total market cap of around $28 trillion.
These enormous companies haven't grown to such enormous sizes by only selling to the US. What makes these companies so awesome is their global reach. In fact, around 43% of sales were to international markets. It's not just the exciting tech companies who are selling iPhones all over the world and dominating what we stream on TV.
Globalization has now been ongoing for many decades. Old titans such as Coca-Cola will be found in every corner of the planet. According to latest figures, Coke made only 32% of its revenue in the US where it was founded, meaning that the vast majority of its revenue was international.
McDonald's is so widespread that economists use the Big Mac Index to report on purchasing power around the world. How awesome is that? You can literally see how expensive a country is by the cost of a Big Mac.
It's not just US companies that are listed in the US. The great thing about America is the availability of cash. This means that many companies will list in the US because that's where all the money is. Ka-ching!
Number 2, US dollar exposure. Investing in global stocks does leave you vulnerable to exchange rate swings. Currency fluctuations can undo any profits made and even turn what would be profits into losses. This is particularly true of less stable countries such as the emerging markets. But the US is home to the strong and reliable US dollar.
Here in the UK, we've seen the Great British Pound depreciate against the US dollar for years. Not great when you're buying investments, but it supercharges the returns that you get from your already held US investments. Let's not forget that those supercharged US dollar dividends that are hitting your pocket are worth more by the time they're converted to sterling.
We doubt that this trend of a depreciating pound will go on forever. But we can't see the pound permanently appreciate against the greenback either.
Moreover, the US is seen as a safe haven, and in times of panic, investors flock to the dollar. This helps to soften the blow of any falls in asset values.
During the 2020 March crash, my portfolio was less affected because of an appreciating dollar versus sterling. It meant my US holdings did not decline as much as they otherwise could have. Awesome.
Number 3, technology. US tech giants have transformed the ways that we live our lives and are a core component of almost everything that we do. They dominate the devices and applications we use, from phones, computers, TVs, taxis, shopping, how we communicate, and everything else.
This trend is not going to change anytime soon. The US has the infrastructure and the knowledge for this to continue for decades to come. When an exciting startup wants a ready supply of the best engineers and accessible capital, there's no better place than Silicon Valley.
Some may also argue that China is an exciting prospect for technology, but the risk is far greater. It's a rigged, non-transparent market run by a brutal totalitarian regime which cannot be trusted in the same way the US can.
Number 4, historical performance. The S&P 500 has had a tremendous record of fantastic returns. Of course, there's no guarantee that this will continue, but when there are decades upon decades of high growth, then you begin to think there's something fundamentally right about the US market that is driving up share prices.
Unfortunately, the same cannot be said about other stock markets. We're big fans of the UK market, but recent performance has been disappointing to say the least. Here we can see the total returns of the FTSE 100 versus the total returns of the S&P 500. Total returns means dividends are reinvested and is the true performance of an index.
The red line here is the S&P 500 and the blue line is the FTSE 100. The S&P is up 52% in just 4 years, but the FTSE 100 is only up a disappointing 8%. Bear in mind that these are both after a huge decline due to COVID-19. The UK has also had the uncertainty of Brexit during this time holding it back, but nevertheless it demonstrates the power and the growth of the US stock market.
Number 5. In the media. The US economy, stock markets, politics and everything else in between is some of the most scrutinised and reported in the world. When you invest, your access to reliable information is going to play a very important factor in your investing effectiveness and hopefully the profits that you make. There is no other market in the world that is so well covered. As long as you have the ability to analyse all of this information, then in theory it should give you an upper hand when selecting shares and investments that perform.
This video is just the tip of the iceberg when it comes to investing in the largest market in the world. We want to know whether you invest in the US or not and why. Let us know in the comment section. Thanks for watching! On this channel we talk a lot about personal finance, investing and all things money, and if you want to see more great content, please click the subscribe button below.
This is MoneyUnshackled.com. See you next time.